Thank you for visiting our YouTube channel. Today we will be going over credit card interest and how it can hurt you. If you like this video, please be sure to give it a like and subscribe to our YouTube channel. We look forward to bringing you more important information regarding how to save and spend money. So we're going to take you through the who, what, when, where, and how of credit card interest and give some scenarios to why it can hurt you and cost you a lot of money. So the who in this situation is you, of course. You're the one who's here to check out our YouTube channel. And thank you again. The what in this situation is understanding credit card interest. The when is now and yesterday, if possible. The how is the how to calculate credit card interest. Now this may look complicated, but I will take you through scenarios in real life dollars to make it make a little bit more sense. But what this is showing is you multiply your daily period rate times the billing cycle in days, which is how many days in that calendar month, times the average daily balance, and that will tell you how much each month you're paying in credit card interest. Why? Well, in this instance, the more you pay, the less you pay. And you will see as we go through these scenarios. For each scenario, we're going to take a person who has $5,000 on their credit card and look at different scenarios in which they're paying the minimal payment, or if they are paying a little bit extra each month. And then we'll go through scenarios where the interest rate is actually lower, and you'll see how drastic the amount of interest paid will be. So we'll start with someone with a 29.99% APR, and this is a type of APR you may see with a store credit card. They may give you a good interest rate to start, but then you end up with a 29.99%, which is basically a 30% APR. So, as I said, each scenario will have a $5,000 starting balance, and if you only pay the minimal payment, which would be 3%, it would take you 532 months, which is 44 plus years to pay off this balance with such a high APR and only paying in 3%. Now, this is because 3% for the first month may be $150, but each month you're paying slightly less and not taking advantage of a fixed payment, which will help you pay off the amount in a quicker period of time. So with making the minimal payments, you will have paid $23,088.52 in interest over those 44 years, and in total you would have paid over $28,000 when you only owed $5,000. Now, instead of making the minimal payment each month, if you made a fixed payment of $150 each month, that total amount of interest goes from $23,000 to $5,884. And if you paid $200 each month, you would pay basically half the amount of interest, $2,944, and it would take you 40 months to pay off your total balance. If you're able to pay $300 a month, it would take you 22 months, and the total amount of interest paid would be $1,549. And if you're able to pay $500 a month, it would take you a year and you would end up paying $826.67. Now, that's an important thing to realize. You owed $5,000. If it was interest free, if you paid $500 a month, it would have taken you 10 months and you would have not paid any interest. And so this is where it's important to take advantage of interest-free periods to make sure that you're not responsible for a high amount of interest in the long haul. So that is a very high interest rate. A 21.99% is something that more people may be accustomed to. So let's look at that same $5,000 balance. Making minimal payments would take almost 21 years or 249 months, excuse me. So the total amount of interest would be $7,351.24, and you would have paid over $12,000 just to repay the $5,000 that you owed. Now, if you paid $150 a month instead of the minimum payment, it would only take you 52 months, and you would end up paying almost $2,800 in interest. If you paid $200 a month, it would take you 34 months, and you would be paying $1,749.88. If you paid $300 a month, it would take you 21 months, and you would pay a little over $1,000 in interest. And if you paid $500 a month, it would take you 12 months, and you would pay $574.44 in interest. Now, this is an improvement from the 29.9% APR in each of these categories, but you're still paying a lot of interest with APR of this amount. So it's important to make sure that you are paying a high percentage of the balance owed. So now let's look at 14.99%, which is basically 15%. With the same starting balance of $5,000, the minimum payment each month would make it that it takes you 14.5 years to pay off the balance. It would result in paying $3,365.11 in interest, and the total payments would be $8,365.11. Now, if you paid $150 a month, you would only be paying $1,500 in interest. If you paid $200 a month, you would pay a little over $1,000 in interest. If you paid $300 a month, you would pay $642 in interest. And if you paid $500 a month, you would only pay $375 in interest. Now, this is almost worth the trade-off if you need to make a big purchase and you are able to pay basically 10% of that initial purchase. It would take you 11 months to pay it off, and you would pay a little less than $400 for the convenience of having the large expense on your credit card. Now let's look at 11.99%, which is 12%. This is one of the best rates that you would find out there, other than promotional balance, which may start at 0%. So with the same $5,000 starting balance and making minimal payments each month, it would take 12 years and 11 months to pay off this balance. The total amount of interest paid would be $2,361.25. So it would be total payments of $7,361.25. And if you instead paid the fixed amount of $150 a month, it would take 41 months and it would cost a little over $1,100. If you pay $200 a month, it would take 29 months and you would pay $782 in interest. And you would pay $497 in interest. And if you paid $500 a month, it would take 11 months and you would pay $294 in interest. Now, with a APR of 11.99%, you can see that by paying $300 a month, you're only paying an extra $100 in interest, but you're able to take an extra 7 months compared to having the higher interest rate of 14.99%. So the goal should always be to have the lowest credit card interest and pay off your balance each month. When times are tight, it's understandable if you can't make more than a minimum payment for a month or two, but it's really important to pay extra, and if possible, try to pay at least 10% of the balance each month so that you will not end up paying a huge amount of interest for the long haul. So once again, thank you for checking out our YouTube channel and this video on how interest for credit cards can hurt you. Once again, please like this video if you enjoyed it and subscribe to this YouTube channel. Thank you. Have a wonderful day.